Okay, so what kind of situation do we currently have on NVIDIA CHF? Let's make a full breakdown. So starting from the monthly, we clearly have a market that has created a nice impulse to the downside and then retraced to which level? It retraced exactly to the previous structure support here on the monthly time frame, now turned resistance. And after the market creates a strong impulse and retraces exactly to the previous support to resistance, specifically on the monthly time frame, we definitely expect at least a rejection to the downside. And that is exactly what the market is giving us. What we also must do is to have informations on this retracement. We have to take a Fibonacci on the impulse. So from the high to the low of this impulse. And what we can see is that first the market tested exactly at 0.786, then broke the structure to the downside and is currently retesting it here, and we can expect continuation to the downside. Going down the weekly time frame, what we can see. Now on the weekly time frame, situation is extremely clear. We have a market that has created a strong impulse, correction, tried to continue higher, it failed. Why it failed? Because we had the monthly resistance, as we have just seen, and now the market is making a move to the downside. Now if the market does something like this, what the market actually is creating? The market is creating an information, and after an information, what do you expect? You expect a pullback to the neckline before the continuation to the downside. So at least we would like to see the market make, possibly from this structure support here, we would like to see the market give us a move back to the upside to complete this information at the neckline, aka the previous support here, not turned resistance. Going down on the daily, what do we have? Now on the daily time frame, we have a market that clearly at the moment is just moving to the upside, creating lower lows and lower highs, which is exactly what we want to see. Why? Because the more the market will continue to the downside, the better it will be when the market will actually be ready to complete the pattern at the neckline. So this is the zone from which we expect to have demand, from which we would like to see the market actually go. Because if the market will go here, it will be definitely a good risk to reward to the upside. And this is overall our upside target. So if the market here on the daily will manage to actually go to this level at that point, here is where things get interesting, because inside of this area, we can be looking for potential longs. How we will be looking for potential longs? Well, before I show you that, let's go and give a quick check at what we have from an NZD and a CHF perspective if we check the COT data, so the commitment of traders, which is what the biggest banks and institutions are currently doing on the NZD and on the CHF. Now, from an NZD perspective, we can see that in the long term, institutions clearly have been shifting their positioning to the long side, going from minus 20k net positions all the way up to plus 2.4k net positions. Then definitely, yes, we did see some profit taking with the last report, with 2k longs getting closed and 1k shorts getting open. But overall, the shift has been quite clear. And if we go and see what we have from a CHF perspective, we can see that the moment is extremely strong, going from 1k to 8k, with longs reaching 17k, which is basically a double what we had here at 9k. And definitely CHF has been getting stronger. In fact, CHF pairs have been making moves to the downside, as we can see also here on NZD CHF. So if the market will actually manage to reach this demand area, this is exactly the zone that is interesting for a potential trading opportunity. And as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market combined with the COT data. But when it comes to entry, the best time frame is the 4 hours. So with students, what we will be doing is monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bearish to a bullish market. And as soon as the market will shift from a bearish to a bullish market and provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of the of the M formation, on the weekly and the neckline. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.